Hi, Scott Gemmell from LJ Hooker Project Marketing. Today I just wanted to have a little bit of a talk to you about something that has come to my attention recently, and it certainly has an effect on both our sellers, our developers and our buyers. It's in relation to the off-plan sales and the approach now of some financiers. I'm pleased to say I've got Hector Manners here with me. He is one of the owner and operators of LJ Hooker Home Loans. We had a little bit of a chat about this last week and I invited him to come in and talk about it here today. So Hector Manners, thanks for joining us.
Thank you for the invitation, Scott.
Excellent. Well Hector, as you know, I got you in because last week I was in WA. One of my salespeople actually gave me a call. We had a situation where a buyer was trying to secure one of our properties. They were very passionate and certainly had made their decision to buy. However, and this was the second time that it had happened to us in only a week, regardless of the individual finance situation, she was basically informed that because she was buying off plan, that they weren't going to give an unconditional approval regardless. So obviously that concerned me. We've got a lot of clients in positions where they require pre-sale, so I gave you a call. I was a little bit surprised by the conversation we had, but I thought you might share it for some of our clients and buyers as to what's going on at the moment.
Okay, thanks Scott. Scott, unfortunately what you have picked up on is the impact of changes introduced to the Big Four banks by APRA, where they have now requested that the banks do two things. Firstly is look at increasing their cash reserves to cover any potential defaults on loans they may have coming through in the near future, and also they have requested that the Big Four do reduce their exposure to lending in the investment property market.
Okay, and look, we've had our challenges in the marketplace before, and I'm sure like those, they will pass, but in the interim period we have developers that are trying to secure off-plan sales to meet their pre-sale requirement, and we have buyers that are certainly interested in securing a property off the plan. So is it a circumstance where we're talking more about the approach in this situation has to do with the valuation?
I think the situation we're dealing with here is a situation that I don't think anybody actually thought about when APRA were looking at trying to slow down the heat in the investment property market, particularly in the southern states. And what this is now creating is a situation where certainly where people are looking at wanting to buy off the plan, the banks are in many instances suggesting that until we have a physically complete dwelling or property, they're not actually going to be able to go to an unconditional contract. They're quite happy to take the loan contracts on, but leave it open until that asset is substantially complete. And this obviously is going to have an impact on the developers, particularly where they're looking at pre-sales to arrange their funding. And it is creating a number of issues. However, I also believe that there are some solutions to these, and it really does come down to us now looking at second-tier lenders who would have more of an appetite for this market, a market that has been predominantly dominated by the Big Four in the past.
Yeah, well, they're taking these steps because we've been and are in a pretty good marketplace at the present moment. So are we seeing this approach or this attitude, if you like, predominantly coming from the Big Four at the moment?
The Big Four are the drivers here, because the Big Four are the ones that are fortunately or unfortunately subject to the legislative guidelines set down by APRA. A lot of your second tier lenders are not subject to these guidelines. Okay. So they do have, I'd have to say, a higher degree of flexibility in the marketplace, and within that flexibility, I think, lies in an opportunity for us to look closely at where we can actually go to develop business over the next months.
Excellent, because, you know, you mentioned before that the approach could be that we have contracts that are subject to a final valuation. So in other words, the buyer's not absolutely committed in an unconditional basis until that completed valuation is done. That doesn't suit a lot of our clients, particularly those that are trying to get pre-sale contracts.
That very valid point, and I think what we're going to have here now is a situation where we are going to have future potential investors who are definitely going to be able to use, let's say, external assets to secure that borrowing requirement to go and effectively enter into an unconditional purchase contract. Contracts that certainly will assist the developer in funding the project. And I think we're also going to have a number of potential buyers in the project who may be on what we might call an open-ended contract that is only going to go unconditional once as we've got a substantially completed building.
And look, that may be a solution for some of our developers that are under construction and are not needing that pre-sale requirement, or they've already met those. But several times now you've spoken about solution, and as I said, we've certainly had our challenges in the past, and we like to find ways to overcome those and solutions. We are coming into Christmas, and I know that financiers might be on limited staff, but I'm going to throw a bit of a challenge out to you, Hector.
Yeah, go ahead. Thanks, Scott.
Well,
I'm
hoping that by the new year, let's say end of January, I'd like to meet back up and you'll have found a solution across the break that we'll be able to share with our buyers and sellers.
So that's the Christmas holidays out the window, but look, happy to take up the challenge, Scott. I'm going to have to probably mention here that I know we will be able to come up with some solutions.
Excellent.
And I'm going to suggest we're probably going to be able to cover the majority of the market requirements, but there may be some instances where we may not be able to make everybody happy with what we come up with.
At least we're trying to do something about it, Hector.
And I think that's the approach we have to take.
Yeah.
And let's see what options we can come up with and discuss these towards the end of January.
Excellent. I'll see you here, 4th week of January, and I look forward to finding out what solutions you've come up with.
Done. Thanks, Scott.
Have a safe Christmas, and to those of you that have taken the time to watch, I hope you've appreciated the information we're trying to share. It is certainly something important to everyone, and one that we've taken quite seriously, and as I said, we're going to do what we can to overcome it. So please enjoy the Christmas break, have a great time with your family, most importantly a safe new year, and we'll see you in 2016 with that solution we were talking about. Thanks very much, Hector.
Have a Merry Christmas in between.
Absolutely.
Thank you.